Hey gang, today we're going to talk about 3 habits of successful traders. Hey guys, Akil here. Welcome back. Thank you for joining me. I guess I should say welcome myself back. If you guys didn't know, I've spent the last week completely out of the markets. Took a little vacation, if you can call it, to welcome the birth of our second kid and kind of just get back into finding more time to focus on myself, including running a race and spending time with my oldest, before getting ready for the September grind. Historically, September is a very busy time in the market, so it's always good to prepare, review, and just set yourself up to take advantage of the opportunity and the volatility, which I predict is going to happen. Taking time off also gave me a time to interact more with our traders on our community chat. And I had a blast. I was on there a lot, talking to a lot of newer traders, talking to a lot of older traders, really just keeping up with everyone's progress, seeing where they're at throughout the year, and kind of helping them focus on what we can do over the next 3 months of trading to end the year and kind of complete the goals that we worked on back in January. Now, one trader in particular shared an awesome video, and that's what I'm going to share with you today. And I think it represents a lot of the qualities that professional trading takes, right? A lot of the qualities that you need to do if you want to become a consistently profitable trader. And just to give you some background about this trader, right? We have trading courses on our site that kind of range from the very beginning to the advanced. So someone can come in that knows absolutely nothing about the Forex market and hop right into the basics course and learn about that. Or if you're someone that's advanced, you can come in, kind of review the beginning material, but then really work on the later courses to kind of find what you need to take your trading to the next level. And the trader that shared this video, his name is Chris, and he came in as a trader that was stuck in that conscious incompetence stage, meaning that he was aware that he wasn't doing something right. He was skilled at technical analysis. He had an idea of how he wanted to trade, what he wanted to trade, but there was still something missing. And I remember talking to Chris early on, coming in saying, this is where I'm at, this is where I want to be, I need to figure out how to get there. And we chatted a lot at the beginning, reviewing his trading basically, and it was very easy to pinpoint where Chris's flaws are at. Again, very good trader technically, but he just needed some guidance and some kind of cleaning up of his trading technique, his trading strategy, right? We always talk about treating your trading like a business, putting together a trading plan, having strict rules. Chris had rules, but they were kind of loose. They were here, they were there, and we need to kind of put them together into something that he can follow and kind of keep hands on his shoulders and focus him in that right direction. And one thing that Chris decided to do is he decided to hold himself accountable. And he said, I'm going to be on the community chat every day. I'm going to post my ideas. I'm going to do videos of them. I'm going to share, right, full transparency, what I'm doing on a daily basis. If you guys like it, that's fine, talking to the other community members. But really, it's a project for him to stay accountable. If he knows he has to share it, he knows that he's more likely to do it the right way instead of kind of breaking his rules, because someone's going to call him out on it. So I want you guys to watch this video because I think it's an excellent demonstration of kind of the process that a professional trader goes through. And when we come back, I'm going to share a few. And actually, let's make a game out of it. See if you can pick out 3 things that Chris is doing in this video that seem like they would be necessary if you want to be a consistently profitable trader. And when I'm done sharing this video, I'll come back and I'll tell you guys the 3 things that stood out for me.
We're here on the Euro Yen 15 minute, and there's a trade that I've just entered. It is a triangle, and I just want to talk through the trade, entry stops and targets, and why I'm actually placing my stop in the position it is, and why I'm actually taking targets a little bit sooner than usual. So what we'll do is we'll do our top-down analysis from the dailies first and look at the trade. Okay, so here we are on the daily time frame, and this was something I spoke about in one of my last videos that I did, and all it was simply that we have done nothing but be bullish for around almost 2 weeks, and as we approached this level and came up to the 131 flat, we didn't quite reach it. I was expecting quite a big rejection at that zone. We came up to structure but not quite the even handled number, and so we got that rejection. Well, it's 11 o'clock now, so just an hour ago the daily candles closed, and if we drop down to the 240, what we can see here is we had obviously that very big rally. We had a small pullback, another rally, a small pullback, another rally with momentum candle, and then all we've done is just see the fall off. And quite importantly, if we put a structure level in there, we've actually closed below this wick. It's not actually a violation because we've not actually closed below this wick, but we've closed in the wick, and to me this is indicating, based on yesterday's candle, that we're going to go lower. Now the signal is on the 15 minutes, so let's drop down to the 60, have a quick look at that, and you can see here that what we've done on the 60 is we've actually already violated that level, and look at what price has done. We've had a momentum move lower, and all we're doing right now is trading sideways, and really importantly, just look at the little wicks here, little wicks, and as we drop down to the 15-minute time frame, you'll actually be able to see this triangle pattern. And what I'll do is I'll just delete everything off, and so it looks like this, and this is quite clear now. So here is the very distinct rally down. Clearly had a trend line here. Let me draw that out again, and what we've done then is we have come down and tested. So we've got one test, 1, 2, 2, 3 and 3. I love it when I see 3 touches either side. This gives me extra confirmation, and it allows me 3 structure levels really to get my stop behind. And if you want more confirmation, well, here you have it in the form of the RSI. We went over sold at 17, and we've got lovely divergence on this particular trade. And with this type of trade, I will always look for a minimum of a 127 extension to take targets. Now I am going to take them before the 127 extension, and I'm going to explain why in just a moment. So this is our entry. Our stops are going to be above this swing high. We're going to be just 5 pips above this swing high, so it's going to put us at 129.83. And our targets, well, one thing we want to be aware of is that we've actually put in a cipher pattern here. And the cipher pattern looks like this, and the completion is actually around there. Now normally I would take profits at the completion of the cipher pattern. However, in this instance I'm not going to do that because price is telling me, well, I believe that price can come lower based on a little bit of experience, and I'll tell you what I mean. Let me just put that fib back in the correct place. Okay, so there's the 786. So our risk is looking like this on this particular trade. So we've got our stop above the entire pattern. It is the safest place to have it. And my target I've gone for is just above the 127. Now really importantly, there's a psychological number there, the 129 flat. I'm going to want to be 10 pips above that particular psychological number, and that's just through back testing that I've done on this currency pair. I know that psychological numbers act as magnets, so we're going to be drawn towards that, and so there's a good chance that we could come down to test the 129 flat but I always front run by 10 pips. And so we're risking on this trade 33 pips, and here we're looking for a reward of 39. Let me do that again. Is that right? Yep, a reward of 39. Okay, so why then am I not taking profits at the completion of the cipher pattern? Well, if we just have a quick look at what price has done, we have just on the hourly, we have violated this level, and we're actually holding this level right now below this structure zone, which is the psychological number 129.50s, and so this type of pattern typically just drops. And if we look left for where the next structure level is, the next structure level is down here. We could certainly see a move all the way down to this level. However, just above it we have the 129 flat, and so I'm going to want to be above that. So that's the reason for taking profits at that zone, and we'll come back and see if this trade was a winner or a losing pattern. And we're back on the euro yen. I'm doing this as an interim video. What's happened is the market came up and spiked me out, and then has traded sideways for excuse me, almost an hour. Here we are on the 15-minute time frame, and made a mistake on the first bit of analysis that I did. Well, when I say a mistake, I used poor judgment for the stop placement. I only went 5 pips above this spike high here, and typically I would go further back than that, because I look at the market, that the market will do what it can to stop you out. Now that doesn't mean I'm being stop hunted. The market is extremely difficult to trade, and unless you use good stop placement, you will be stopped out more frequently and see fewer winners than you would using proper stop placement. And on this type of trade, I should have had my stop further back. I should have made this a 1-to-1, and the reason I've got back involved is because we came up to test the highs here. Let me put that structure level on there. You can see that we had a rejection, and then we've just traded sideways. So for me the trade is still valid, and if you look down here, we actually had a lower low, lower close. We actually closed below this level, so everything indicating that we can still go lower. Just because we never saw the drop instantly is irrelevant to me, and that is purely based on experience and my back testing. And so in actual fact, I've only just got in this trade. I actually wanted my stop up there just above that spike, and so the trade is still valid. So we'll come back and hopefully see if we can earn our pips back. If we don't, well, I've cost myself more pips because I didn't use the correct stop placement in the first place. But you know, mistakes happen, and if this trade goes on to win or lose, nevertheless I know that originally I should have had my stop in a better place. My alarm's just been triggered, and we're pushing lower now on this trade. There's my text message that comes through to my mobile. I am now able to move 2 pips past break even on this trade. I'm disappointed, to be honest, disappointed with myself, because I have been working on better stop placement and ensuring I don't make mistakes for quite a period of time, and I do look at this as a mistake. I should have been 10 pips above that above the high. They're my standard rules. I will go back and rewatch this entire video again, and I'll make notes of it, and I'll strive to do better and make less mistakes. The good thing is that this is actually now going to be a break-even trade if we can push down that extra couple of pips to go and hit those targets. And just really look at what we did. You know, we made a new low here, we came up to retest the highs, spiked up, and that was the reason for me getting back, getting involved again in the trade. And if this hits, I will instantly buy it up for the cipher pattern that we have. Okay, we're just back retesting the buy order now. Just need it to spike through 1 pip, and we'll be able to capture this as a live winning trade. Okay, we came back down and hit targets, and it's taken. So that was a nice winning trade for, I think it was 53 pips in the end.
So there were 3 main things that stood out for me in Chris's video. One was the fact that Chris was doing everything rules based. If you followed his analysis, right, he was very confident in telling you what he was doing and why he was doing it. It wasn't words like, well, maybe I'll do this, or sometimes I'll kind of do that, or I think I might do this. It was very clear and concise, right? This is what the market did. Because the market did this, this is how I view it. Because I view it, this is how I react to it. And that's what we want to have. We call it the if-then syntax, right? Kind of like programming, right? If this, then that. If this, then that. If this, then that. And as traders, we're really mechanical, kind of just working ourselves down that checklist. So that's one thing. Everything was clear. Everything was rules-based. It wasn't, I'm going to put a stop loss here because it looks good. I'm going to adjust targets to there because it feels good. Everything had a reason. That's important as far as your consistency goes in trading. If you're kind of everywhere, right, you're really inconsistent. And like I always say, right, consistent analysis plus consistent execution equals consistent results. Secondly, was the fact that Chris was taking time to review his trade, right? As traders, we are entrepreneurs. As entrepreneurs, we are our own bosses. Being our own boss means that we are at the top of the totem pole, right? There's no one on top of us looking over our shoulders and making sure we're doing the right things. So we have to make a habit of putting ourselves in the position where we self-review. And one of the reasons Chris is doing these videos, if you didn't hear him mention it, is because he goes back at the end of the day, reviews it, take notes. This is what I did right. This is what I did wrong. And it's basically like reviewing the tape. He's reviewing himself as a trader, making sure he followed his rules correctly. And he's also reviewing the trade as far as from a technical standpoint, trying to see if there's anything he could have done better, if there's anything that could have done worse, if there's any really small little subtle maybe thing that comes up in the market that may allow him to make an adjustment in the future. And that's big. If we want to be consistently profitable traders, right, the stuff that we do outside of the chart, so outside of just your trading hours or executing trades, talking about review and journaling, that's key. That's very, very, very important if you ever want to earn long-term consistency in this business. Finally, the last thing that stood out for me is the fact that Chris owned his mistake. If you notice in the video, he made a mistake with a stop loss. He did one thing, he should have done another thing. And the trade ended up winning. And it's so easy for someone to say, oh yeah, well, you know, it worked out, so it's okay. Or blame someone else. It's the market fault, or I didn't make a mistake. I love the fact that Chris says, hey, this trade ended up winning, but I did get stopped out for the first time, and it's because I did something dumb. I made a mistake. I put my stop loss here. It should have been here. I'm happy that I made the 53 pips or whatever, but I do have to consider it a bad trade. And that's very important. Again, it goes back to doing a review of ourselves. It's so easy to kind of forget about our actions when we're right and just focus on the results, saying, oh, well, the trade worked out, so everything I did was okay. Well, no, you could have gotten lucky. What's more important is being rules-based, consistently following those rules over time, because that's what's going to bring you, that's going to be the difference between short-term success and long-term success. So the fact that Chris owned that mistake, he wrote it down. I know he's going to try not to make it again. That is massive. And these are all signs of someone that is going to be a very good trader down the road. Matter of fact, he's a very good trader right now. But as he becomes more consistent, he's going to be in that top 10, that top 5 percenters out there. I just know it by the habits of what he's doing. So I know this video is a little bit different. I hope you guys enjoyed it. Tier 1 members, we do have our Q&A tomorrow. I know it's Labor Day in the States, but what better to do on Labor Day than labor and do a Q&A session. We got some pretty cool topics for you. And if I mentioned this before, if you guys do videos, right, you guys are on the platform, if you're recording videos, feel free to send them my way. I can share them on YouTube. We also want to get in the habit of doing reviews, maybe taking those accountability sessions and making them into review sessions where someone like Chris comes in, shares a trade, and then Jason or myself come in and we kind of critique it and say, hey, okay, this is what I like, this is what I didn't like, this is what you could have done better, and whatnot. I think that's taking it to the next level because we do have some very big things planned. Like I can't spill the beans on it, but we're working on a way to kind of get you to a place that will lead you right into a much more professional setting, so you guys can make, for you guys that don't have, $100,000 accounts, you guys can go right into turning your trading skill into a career. But again, down the road, far down the road, can't talk about that yet. But for you guys that are in the course right now, take this time seriously, because by the time you're done, especially you guys that are on annual memberships, by the time you're done, you may be ready to jump right into something that's much, much bigger. So appreciate it as always. Take some time to like this video. Subscribe if you're new. There are 500, 600 plus videos and podcast episodes on this YouTube channel. So take your time to explore. Leave me a comment. Let me know what you think. And until next time, plan your trade, trade your plan. Take care, traders.